Monday, May 21st, 2018, Monaco 64, home of alternative economics and contrarian views. So it's 8 a.m. London. I've been watching the markets for the last hour or so. I've been reading articles. I've been looking at what's going on, and there's a lot going on, of course. We're seeing the stock market early yesterday when it reopened, late Sunday. It was up already 200 points, the Dow. Gold was virtually unchanged, and the currencies, but then they were all sold off. So the dollar is a lot stronger this morning. Gold and silver are down. Am I concerned about gold and silver? No, gold and silver are money, and that's one point I'd like to talk about. Very interesting article by someone I know I've been in contact with in the past before. He used to work for Barclays Bank in Frankfurt, but he's a gold bug and he doesn't work there anymore. His name is Thorsten Polleit, and he writes for the Mises Institute. He's written an interesting article, and they've posted it on Zero Hedge. I'm going to look at the what's happening in Italy. I think that's one of the reasons why the dollar is so strong relative to the other fiat currencies and gold as well. And then I'm going to look at an article posted by Zero Hedge about what Goldman Sachs thinks about the U.S. fiscal situation, and it's not good. So there's so many conflicting views and stories. What's happening here in the markets then? Well, we've got gold making a new low for the year. We're at $1282.50, down almost $10. We're right on the lows here. The high overnight has been $1292.88. Silver is down 1% at $16.27, down 15 cents. So gold's down 0.75% and silver is down 1%. The Dow is up 200 points, 212. 24,928, up 0.86%. The S&P future is down 12 and 3/4 points, or 0.5%, and the Nasdaq is up 0.5% as well, up 34 points. The Nasdaq 100 future. So the dollar quite strong this morning. Dollar index is at right now. Let's see. Well, it's not being updated but I tell you what the currencies are doing. The pound is down 0.4%. The euro is down 0.4%, and the dollar is up 0.5% against the yen. So dollar index up, I would say, almost 0.5% as well. The pound is at 134.15. The low has been 134.10. The euro is at 117.23, right near the lows, and the Japanese, well, the dollar yen is 111.36, right near the highs as well, up 0.56%. Crude oil is up 0.5%, up 35 cents, 71.70. The 10-year yield is actually rebounded on Friday. I think Thursday the 4.5-year high was 3.13%, the 10-year yield. And then on Friday, it dropped to like 306. This morning, we are at 308. So 10-year yield still elevated. Bond market still under pressure. The other interesting bond market is the Italian bond market, of course. That's been because of all the political coming and going that's happening. The Italian 10-year yield is risen about almost 50 basis points in 1 month, but it's still at 226. So Italy, with all its troubles, the 10-year yield is still below the U.S. 10-year yield, which is kind of weird. I remember in the early mid-90s when I worked in the futures market, I had a lot of clients in Italy, institutional clients, and we traded a lot of Italian government bond futures. We traded a lot of Italian Euro Lira, which is the LIBOR for Lira. And I remember the rates being above 10%. And that was before the Euro came about. And now with Italy in a much worse situation, we got the 10-year yield at 226. Did that make any sense to anyone? Not to me. Does it make any sense that the US has got endless debt and the yield is still only at 308? No. So let's look at some of these stories. I'll start with Thorsten Pollite's article. I'll put links below in the description if you want to read it. And he says, Pollite, gold should be viewed as money, not an investment. And I agree with him 100%. I've said before that gold is a currency that is not able to be printed out of thin air, and over time it holds its value. So it's a savings instrument. Sometimes the price goes up a lot, comes down a lot, and people get discouraged and they get rid of their gold. I don't even say sell their gold, because you can't really sell money. They get rid of it. So, and he goes on to talk about Warren Buffett and how Warren Buffett has done really well by having stocks. And that's true. Warren Buffett, you know, if you had bought Berkshire Hathaway 50 years ago, you'd be laughing right now. But one point he makes towards the end is this. Buffett and Munger have undoubtedly, I'm reading from the article, Buffett and Munger have undoubtedly given their shareholders a great opportunity to escape the vagaries of the fiat money system, to defend themselves against the central bank induced inflation, and also to become wealthy. Unfortunately, however, the serious economic, social, and political problems that fiat money inflicts upon societies cannot be solved this way. And he goes on to say, for that reason, one should deliberately reflect Buffett's return comparison between stocks and gold, and make oneself aware of the fact that gold can be viewed as a form of money that may even deserve to be called the ultimate means of payment. For the investor, there are no convincing economic reasons to discourage holding gold as a form of longer-term liquid funds, especially if the alternative is fiat money. And he concludes by saying, the timeless insight was already suggested by economist Ludwig von Mises in 1940. Von Mises said, the gold currency has been criticized for various reasons. It has been reproached for not being perfect, but nobody is in a position to tell us how something more satisfactory could be put in place of the gold currency. So there isn't. And for all of those who, because he talks about it being an ultimate means of payment, and I'm sure a lot of you are going to say, oh, I can't take my gold and to the shop and buy things. But he doesn't mean that. He means that over time, gold will always be there. You can always exchange it for anything, especially the fiat money system that is imposed by government. So I think that's a good article for people to read, especially I'm sure people are going to be like, oh, you know, the gold is rubbish, it's going down, but it's not really, in my opinion. As JP Morgan also said during a congressional hearing, someone asked him what gold was. He said, gold is just money. Everything else is credit. So the dollar right now, aka, well, the Federal Reserve note, the euro, all the other currencies, they're just credit. And I'll show you why I'm not changing my mind. You know, it's even Goldman Sachs is writing about it. And Zero Hedge has caught on to it. And I quote from Zero Hedge, the article this morning. It says, from yesterday evening, it says, the outlook is not good, says Goldman Sachs. Goldman sees U.S. in dire straits as deficit to hit $2 trillion in 10 years. That's the budget deficit, by the way. That's not the national debt. People get confused. And I hear here in the UK as well, politicians they say, oh, the deficit has gone down. But what they mean is like the budget deficit, but the debt's going up. And when they say it's gone down, it hasn't really. For for example, after the crisis of '08, the budget deficit in the UK was over 10% of GDP. And now that it's about 3, they say, oh, the deficit has gone down. But no, the debt's kept going up. There's still a deficit with 3% of GDP, which is still huge. So that's what Goldman mean. And this is their best scenario. And they go over, Zero Hedge goes over how they warned people 3 months ago about this. And they've come back and warned again now. And they say it could be even worse. And this is like their optimistic scenario. So yeah, the problem with the fiat money system is that credit is money. So, and the main driver of the economy since '08, because the whole thing almost imploded, has been the government. They've printed money out of thin air through the central banks. They increased the national debts. They increased deficits. Without these deficits, we'd be in the Great Depression. And that's the truth about what the economy is doing now. Yeah, and that's why they need to, that's why politicians are not gonna change anything, and it's even gonna get worse. So can you honestly, in a scenario like this, keep, over the long term, save in paper or fiat currencies? I can't personally make myself do that. That's why I hold gold and silver. Investments, that's something else. And I'm not claiming to be an expert in investments or where you should put your money. I think that's up to the individual to do their own homework. I'm not an advisor. I'm an observer of what the monetary system is doing and what it is. I can tell you that the dollar, the euro, the pound, the yen, the yuan, all those currencies are just debt, and they're going to become worth less and less. And why is that? Because their supply is growing forever and ever at the moment, because in the fiat money system, you cut the supply of money, you cut the supply of credit, the money supply is destroyed. In the gold-based monetary system, there's always a supply of money. Everything above it is credit. But we've become so unanchored from real money or gold that the supply of credit is so huge that if it's pricked or implodes, it will have a huge impact on the economies. Under a real money system, gold system, the base is much bigger, and the credit above it is much smaller. So if there is some kind of credit event, it won't hurt as much as the economy, and that's what's concerning, and that's why everything's so confusing. And what about the stock market? If do your homework. One thing I would say though, you look at the Dow, it's up at 25,000 almost. But if you look at 30 years ago, the components of the Dow, they're not the same as they are today. A lot of companies disappeared, so it's not as easy. Always say, oh, just buy the Dow and it will go up, because there's a lot of companies that are in the Dow today that weren't 30 years ago. So you need to do your homework and invest in what you know. What else? Oh yeah, Italy. So Bloomberg article, Italy's populists seek new premier amid Euro warning. So I read here from this article this morning. Italy's two populist parties agreed on a prime minister sealing a government deal amid a warning by France to avoid putting the Euro area's stability at risk. So yeah, there's a lot of concern that Italy could issue a parallel currency to the Euro. I think that's the main thing here. And this is a first, this kind of government. And they're also looking to start universal basic income, which I think is a complete, it won't work. It's giving money to people for doing nothing. That never ends well. So Yeah, I think that's one of the reasons why the dollar's been quite strong. Worries about Italy and the euro. There's also problems in emerging markets. Emerging market currencies are under pressure, and the dollar is doing well because of that. A lot of people will say to me, "Oh, I should have bought the dollar because the dollar is strong and got rid of gold." And as I say always, all the fiat currencies are sinking. They're all sinking, but sometimes they sink faster than others. They come up. The dollar's coming up for a bit of air right now before sinking again, and that's all there is to it. You go back 20, 30 years, the currency that has done the best, of course, is gold, because it can't be printed out of thin air. It is manipulated, but they can't do it forever, because if they do it manipulate it forever, they'll end up having no gold, the central banks, because people are not stupid. They're gonna buy the physical. So that's it for this morning. Interesting start of the week. And if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can follow me on DTube, which is on the Steemit blockchain, so you can follow me on Steemit as well, and on Twitter. And I'll talk to you later. Take care. Bye.